Thank you very much, Abiel. Charles Rigera, Chairman of the CIS Kenya, members of the CIS Kenya Board, the CEO of CIS Kenya. Of course, we need to recognize Justice Fred Ochieng. Thank you for being here. Thank you for gracing this occasion. Representatives from banks, other institutions, World Bank, distinguished guests and participants of this conference. Good morning to all of you. I'm pleased to join you today at the start of the 4th Regional Credit Information Sharing Conference. I thank CIS Kenya for the invitation for the invitation and the opportunity to give this opening address. Let me also recognize the presence of all participants, facilitators, and resource persons both from Kenya and beyond. We particularly welcome those that have come from outside the country. We noticed that our brothers and sisters from the East African community were here. And I also noticed that omission of, we should have also played the East African community anthem. They recognize that. But we'll leave that. Your insights will enrich the discourse on credit reporting and contribute towards advancing the objective of CIS in this region. The theme of this conference, Systematization of FinTech Disruption in Africa, is an apt one for the times we are in. Indeed, the deployment of digital technology is in all facets of financial services has significantly enhanced and revolutionized service provision. The use of FinTech is increasingly changing the interaction between providers and consumers of financial services, including credit reporting. I am pleased to note that financial technology and its impact on the financial sector will be a key part of this conference agenda. I've made this point repeatedly that FinTech offers us the best chance for much more financially expanding financial inclusion, and also for greater sharing of wealth in our nations. However, there's much to be done. There's much to be done. The Central Bank of Kenya envisions a banking sector that works for and with all Kenyans, that is anchored on 4 pillars. Namely, first of this is the adoption of customer-centric business models. The second is risk-based credit pricing. The third pillar is enhanced transparency and information disclosure. And the final pillar is an ethical culture in which players endeavor to do what is proper and right. So what's the role of CIS in this vision? What contribution will CIS make towards realization of this vision? As a critical part of Kenya's financial sector infrastructure, the CIS mechanism is set to play a key role. I'll explain it in a minute, but I thought it's interesting to have a sidestep into some of the questions that practitioners like yourselves and ourselves as regulators struggle with when we begin thinking of the CIS systems. And I think the first question everybody asks is data. How do we deal with the data? And should we just look at the good data, meaning positive data or negative data? There's also I think, excessively boring discussion about expanding the data set to utilities and things like that. That should be obvious. I don't see that as a big question. But then there's the other issue of speed. How quickly does my information, how up to date is my information? Is my credit score near real time in terms of my borrowing pattern? Does that get reflected quickly? And also other things in terms of the algorithm themselves. These are the 3 things I think in talking to some of you, we've kind of, in my view, over-discussed these issues. The way to think of it is by an example that I'll give you. Recently, well, maybe now it's 2 years ago, it's more like 3 years ago, and we looked at one of the platforms, lending platforms, one of the larger lending platforms in Kenya, and we were looking at the borrowing patterns of people there. And we noticed, it's a long story, but the short story of it is, at the end of it, the ladies, the mamambogas, were borrowing in the morning, and actually I will tell you like 3 o'clock in the morning, and they would use the money in the course of the day, and then in the evening would return, would repay. Actually, the borrowing, I mean, in this platform, they could have kept the money for 30 days. But for some strange reason, they would repay in the evening, and then the next morning borrow again. Now, as an economist or financial planner, if I talk to the lady, I'll say, what are you doing? You're crazy. I mean, keep the money. You're just borrowing the same amount of money the next day. Keep it for 30 days. And some of us did push that. The only trouble is eventually you realized what this lady was doing. She had figured out that actually by borrowing again for 30 days, the algorithm that this platform was using would allow her at the end of 30 days twice as much. So she had figured out that this was the way. At the end of the month, she was borrowing 30 at the beginning. At the end of the month, she could go up to 60 or whatever the numbers were. In a sense, she's better than Cambridge Analytica. So it comes to us, if these are the people we are working with, but somehow our CIS system doesn't catch up or doesn't keep up with that sort of appreciation of what's going on in the trenches. Yes, we are anxious. Yes, we are in a rush. I've been here now, this is, as I was told, my 4th time. I'm not sure if I came to all 4, but maybe one of them the deputy governor attended. But this shows our commitment and desire to actually make the CIS system work. Unfortunately, and this is my challenge to you, we haven't really pushed ourselves forward. So it's a bit like me wanting to train for the marathon. And yes, I go up in the morning and I run a little and all that, but actually my weight is increasing, not decreasing. So I have got something, there's something wrong. I have the words and things like that. But I don't quite get to being a proper marathon runner for some strange reason. And this is my challenge to you for this conference. We need to actually break out of our shell. We need to be not like the others. There's one of my favorite stories it's actually not a story, it's a non-fiction piece by V.S. Naipaul. And the title of it is, What's Wrong with Being a Snob? Right? That's the title. Very aggressive, and really the point here is, we don't need to be like the others. At times we look at the US, we look at other jurisdictions, South Africa even, and say, okay, this is how they're running their CIS system. Let's try and be like them. Oh, no, actually, the central bank is not about to be like the others. We want to be the best. We want to be the leaders in the directions that I mentioned, and indeed, I'll explain a little more. So as a support service, the CIS initiative can work towards meeting the needs of market participants in the following 4 ways. First, in terms of customer centricity, this involves putting the customer at the heart of business. In the CIS context, customer centricity entails handling customer information fairly and ensuring data is accurate and updated continually. Today's technologies and digitized communications provide credit reference bureaus with a cost-effective communication channel to reach the market and be responsive to customer issues. So again, the use of technologies, the use of the information that is. So in a sense, that's where the disruption should be. If you really want the word, disruption. I have issues with that word, but so be it. That's really where the disruption should be in the context of the CIS systems. There are rapid changes in customer credit information that have resulted from new service offerings such as mobile lending. It should be possible, assisted by technology, to update customer credit information on a real-time basis as and when new information arises, keeping customer credit profiles up to date at all times. The second of these is, of course, risk-based credit pricing. With enhanced capacity to assess credit worthiness, borrowers with good information capital should benefit from competitive credit pricing. CIS is a key element in this determination. One of my questions that I ask bankers is, when you talk to them, particularly tea with the governor, and I mean there's a positive tea with the governor, and you ask them, so how are you doing? They talk about their how well they are lending and asset base and things like that, number of branches and things like that. One of the questions I ask is, how many data scientists do you have? Now, if it's a CEO, he'll generally squirm because he doesn't know. If the CEO doesn't know how many data analysts they have, or they have recently employed, then he's not in this game he's in a different century. He's in last century. How many data analysts do you have? How many, I guess now they're called financial, or actuarial sort of science experts. But it's not just that. How many other analysts in terms of IT analysts do you have in your institution? Because this is really how you're going to create a good algorithm, not sort of a cut and paste algorithm from a different jurisdiction. You have to it has to be brought down and fit for purpose in our jurisdiction with our people, with the ladies that I mentioned and others like ourselves. So in that sense, you need people that can not just tweak the systems that are brought to us from other jurisdictions, but people that can build them, and then they will be fit for purpose. The third element here is transparency. For the CIS model to gain the necessary traction among market participants, it is critical for market players to appreciate the processes by which credit scores are derived, maintained, and how scoring models are applied. At the very least, the processes should be logical and understandable to customers and market players. This is a big fight with commercial banks. Commercial banks are changing. In the past, they used to do everything in-house. Now they actually offshore some of their services, and just like any other an airline, they don't always have, even for instance, fuel. They buy fuel from somebody else. So, but somehow banks have been very slow in this. And an area where they've been slowest, in my view, is in the area of analytical models. In this case, what you'd say credit scoring models for customers in their lending practices. And they want to use their own in-house models, which they created, and nobody knows. It's a black box. Nobody knows what is in there. At least I can go to my favorite credit reference bureau and ask them, what is my score and what is in there? And they, as we are told, they should explain to me what is in there and how I can improve it. Maybe I need to repay this loan that has been, on the edge for some time, or whatever else it is. In that sense, banks need to move towards offshoring those services to you. Now, I use offshoring in a loose sense, but I think you can understand. Your models, your scores, credit scores, have to be reliable and actually very useful for the banks themselves so that their own in-house models become completely obsolete. My view is they're obsolete already, but you have to challenge them in that way. I know there's some bankers in the room, and I'm challenging them as well, because yes, it is important for all of us to feel challenged so that we can move forward. The fourth element is ethics. The CIS mechanism should be underpinned by a culture of integrity in the handling of customer data, ensuring data is used as authorized. CRBs could also promote an ethical culture of sensitizing their customers on correct data use with a view to ensuring data privacy and confidentiality. This is extremely important, and it is part of the points that we need to check in terms of licensing the institutions, how you deal with data. And the problem isn't just protecting it from external hackers. It's also protecting it from insiders and having access on a need-to-know basis. So the way you keep, or rather let's say, layers of protection around the data in particular ways. So as an important segment of the banking sector, therefore, CBK's vision for the CIS initiative is one that effectively facilitates the use of information capital among market participants in assessing credit. It should also nurture market discipline among participants. Towards this objective, there has been some wins over the last few years. And I'm happy to note that credit reporting is gradually earning acceptance among the public, and market discipline is gradually developing among market participants. Since its launch in 2010, usage of personal and institutional credit reports has risen from less than 300,000 in 2010 to 4.4 million in 2017, with lending institutions dominating these requests. The number of licensed bureaus also rose from 1 to 3 over the same period, while third-party data providers increased from 0 to nearly 1,500 by the end of 2017. With the increase in participation in the mechanism, the use of credit reports is now becoming an integral element in the appraisal of credit applications. But there is still much to do. As we register the successes, we must also acknowledge the challenges which need to be addressed through appropriate solutions. The CIS mechanism still faces challenges relating to data quality, data transmission, differences in the rating scales used by the various credit bureaus, and failure of credit scoring models to incorporate and respond quickly enough to new pertinent information. In addition, the handling and resolution of consumer complaints need to be improved for greater responsiveness to customer needs. In view of the large volume of data involved in the CIS mechanism, information technology has become an indispensable tool in the processing, transmission, and retrieval of data. As databases become increasingly complex, there will be greater need for more specialized systems and human resources to administer these systems. Appropriately designed information systems are therefore critical if data handling challenges are to be addressed effectively. To participants is the establishment of a data hub that would serve as a common CIS data repository. This would address concerns over system compatibility among various market participants. As we maximize on the advantages of information technology in effective credit data management, we should also be alive to the risks, particularly around data security, integrity, and business continuity. With financial service providers being increasingly reliant on electronic platforms to provide services, they are also vulnerable to cyber risk incidents. This includes the unauthorized access to data, system hacking, and corruption of stored data. These pose significant operational, legal, and reputation risks that should be mitigated through adequate safeguards and robust business continuity plans. At this point, I recall there's a philosopher, Roman philosopher, that is quoted as saying, "It is not because things are difficult that we do not dare, but rather it is because we do not dare that things are difficult." And I think this applies to us at this moment. Yeah, we have all these challenges, sure, but we can overcome them. Let's dare. Let's dare to deal with them and with those seeming difficulties, and they will melt like wax. On its part, the Central Bank of Kenya, in consultation with other industry players, is pursuing various initiatives towards addressing the challenges facing the CIS mechanism, and aimed at addressing the following areas. First, improving the quality of reporting by CRBs and lending institutions, particularly on new service offerings such as mobile lending. Second, enhancing transparency by CRBs in their credit scoring models. Third, embedding credit scores in credit risk pricing by banks. Fourth, addressing consumer concerns through sensitization on the CIS mechanism. And finally, enhancing data security, business continuity, and cyber security resilience. The development of an effective CIS mechanism is a journey involving many participants, none of whom can carry out the process on their own. There is therefore a need for all players to collaborate on the journey to ensure the CIS initiative supports the banking sector vision. I'm therefore glad to note the ongoing reform initiatives being taken jointly by CBK, the various CRBs, banking sector players, and other development partners towards addressing the challenges hampering the CIS initiative. I am informed that CIS Kenya has arranged training programs on credit risk and problem loan management as part of this conference. I commend the organizers of this initiative, which will add to other ongoing capacity building efforts. As we strive to ensure capacity in this regard, my challenge to all participants is to deliberate and recommend ways by which the challenges facing the CIS initiative can be addressed. This will enable the mechanism better serve its intended function of enhancing access to credit, including by underserved market segments, particularly the micro, small, and medium-sized enterprises. With these remarks, ladies and gentlemen, it's now my distinct honor and pleasure to declare the 4th Regional CIS Conference officially open. I wish you fruitful deliberations. Thank you very much.